Yo, I ain't here for the money, I ain't here for the fame. Though it might be nice to own a jet plane, I'ma do it all for you.
This week in the financial markets, investors will be keeping an eye on several key events and economic releases. The week will be shortened, with U.S. markets closed on Monday for the Juneteenth holiday. Despite the shortened trading week, there are still important updates and earnings reports to watch. Housing market updates will be in focus as the National Association of Home Builders, NAHB, releases its housing market index for June. This index provides insights into homebuilders' confidence and is closely watched as an indicator of the health of the housing sector. Economists are projecting a reading of 48, down 2 percentage points from 50 in May, but still indicating positive sentiment among homebuilders. The housing market has been resilient this year, rebounding from the impact of rising mortgage rates in 2022. On Tuesday, the U.S. Census Bureau will report on May housing starts and building permits. These figures serve as proxies for home construction and overall supply in the housing market. Economists expect housing starts to have increased slightly to 1.405 million units, up from 1.401 million in April. This gradual uptick in construction activity reflects ongoing demand for housing, although the pace of growth may vary across regions. A significant event in the upcoming week is the testimony of Federal Reserve Chair Jerome Powell before Congress on Wednesday and Thursday. This semi-annual testimony on monetary policy provides insights into the Fed's stance on interest rates, inflation, and the overall economic outlook. Powell's testimony follows the recent Federal Open Market Committee, FOMC, meeting, where the Fed decided to keep interest rates steady after a series of rate hikes aimed at curbing inflation. Investors will be closely monitoring Powell's remarks for any hints about future monetary policy actions and the Fed's assessment of inflationary pressures. In addition to Powell's testimony, there will be a flurry of earnings reports from various companies. Some notable companies scheduled to release their earnings include FedEx Corporation, FDX, Accenture, ACN, Darden Restaurants Inc., Dry, BlackBerry Limited, BB, and CarMax Inc., KMX, among others. Earnings reports can provide valuable insights into the financial performance and prospects of individual companies, and they often have a significant impact on stock prices. On Friday, S&P Global will release its latest Purchasing Managers Index, PMI, reading for June. The PMI is a widely followed indicator of economic activity in the manufacturing and services sectors. A reading above 50 indicates expansion, while a reading below 50 suggests contraction. Investors will be watching this release for clues about the strength of the U.S. economy and the pace of recovery. Looking at the broader market trends, stocks have had a bullish week, with the S&P 500 registered gaining 2.8% so far. The market reaction to the recent FOMC meeting suggests that investors either do not believe the Federal Reserve will be as hawkish as initially suggested or have confidence in the economy's ability to handle additional rate hikes. The strong price action and the breakout above the resistance level of 4,200 in the S&P 500 registered have caught the attention of bullish investors. However, technical indicators, such as the Relative Strength Index, RSI, suggest the market may be overbought in the near term. Historically, elevated RSI levels have often preceded market corrections, although the exact timing and magnitude of any correction remain uncertain. In terms of individual stock movements, there have been some notable developments. Apple Inc., AAPL, C3AI Inc., I, and Carnival Corp., CCL, have reached notable 52-week highs, reflecting positive investor sentiment towards these companies. Unusual call and put activity has been observed in certain stocks, indicating that options traders are positioning themselves for potential volatility or specific price movements. This can be an important signal for investors, as it suggests that some market participants may have differing expectations for the future direction of these stocks. Meanwhile, the cryptocurrency market has experienced mixed performance over the past week. Bitcoin, BTC, the largest cryptocurrency by market capitalization, has been trading within a relatively narrow range, struggling to break above the key resistance level of $40,000. The market sentiment for Bitcoin remains uncertain, with investors closely monitoring factors such as regulatory developments, institutional adoption, and macroeconomic trends that could influence its price movement. Altcoins, on the other hand, have shown more volatility, with some experiencing significant price fluctuations. Ethereum, ETH, the second largest cryptocurrency, has been under scrutiny as it undergoes a major upgrade known as Ethereum 2.0. This upgrade aims to improve scalability and security on the Ethereum network, potentially opening up new opportunities for decentralized applications and smart contracts. Investors and developers will be closely watching the progress of this upgrade and its potential impact on Ethereum's price and market dynamics. In the commodities market, oil prices have continued to climb, reaching multi-year highs. This upward momentum has been driven by a combination of factors, including increased global demand as economies recover from the COVID-19 pandemic, supply constraints due to production cuts by major oil-producing countries, and geopolitical tensions in key oil-producing regions. The price of Brent crude oil surpassed $75 per barrel, a level not seen since late 2018, while West Texas Intermediate (WTI) crude oil prices have approached $73 per barrel. The ongoing rally in oil prices has implications for various sectors of the economy, including transportation, energy, and inflationary pressures. Gold, often considered a safe haven asset, has seen a relatively muted performance in recent weeks. The precious metal has been influenced by a combination of factors, including the strength of the US dollar, inflation expectations, and market sentiment towards riskier assets. The Federal Reserve's monetary policy decisions and their impact on the US dollar will continue to be important drivers for gold prices in the near term. Additionally, any developments that affect investor sentiment and the perceived need for safe haven assets could also influence gold's performance. Geopolitical events and macroeconomic data releases can also have significant implications for the financial markets. Investors will be closely monitoring developments such as trade negotiations, central bank announcements, fiscal policy decisions, and geopolitical tensions. Any unexpected news or policy shifts can introduce volatility and alter market dynamics, making it essential for investors to stay informed and adapt their strategies accordingly. In conclusion, the upcoming week presents several key events and releases that could impact the financial markets. The housing market updates, Federal Reserve Chair Jerome Powell's testimony, earnings reports, PMI data, and ongoing developments in cryptocurrencies and commodities will be closely watched by investors. Market participants should remain vigilant and consider a balanced approach to navigating potential risks and opportunities in the ever-changing landscape of global finance.